again, my expectation is that we're gonna grind sideways as per usual on a Fed day morning session. So we're just going to go through the statistical analysis part of this, and it really it does fall into that risk management side of the business of your business because understanding your stats is very, very critical. And so we're going to go through just a real brief recap of what we did last week on building your plan. We're going to go through some trading stats and then uh, a per risk trade calculation. I don't know if we're going to get to that, but we'll definitely get to that next week. And then that journaling, the IDing your tendencies, and we'll fall into that next week. And then your periodic reviews as to how often are you actually going and sitting back through and reading your stats, understanding what you're doing, understanding what is happening within your own execution. Okay, so it kind of falls into both here and here. But last week we covered the four quadrants, at least the way that I look at trading in the entire trade process. So you got your analysis, right? Um, what is your pre-market rundown? What is your process? And some of you guys have sent me yours, and it looks pretty good. But a couple of tweaks here and there, and I think you guys may have it. But so then I gave you guys mine, and I think I sent out that slide deck last week. So if you missed it, you can either watch the recording from last week, or you can check out the slide deck. I think it's in the chat. And but my process it's a multi-time frame top-down analysis. I identify my daily bias. I take a look at what my if-then scenarios are for the day, and then as the market opens, I either confirm or negate that bias and those if-then statements, right? So if price takes out, for instance, if price rallies off the open in this overnight downtrend, and we take out this price shelf here, and I see weakness and I see that structure break, I'll look for an entry, right? And that's when I get into my setups. So after I confirm or negate that we are weak off the open, we took out a level or we failed to hit a level is another way to look at it as well. Then I start to look for my setups, okay? And I have essentially three setups. One of them is one side of the same coin. It's a breakout or a breakdown. And then one of them is a sweep in reverse where there's a liquidity raid and then breaking a break of the trend in the opposite direction, whatever that's you could call it a tertiary trend or whatever that intraday trend is. It just kind of depends on the perspective of where you are. Um, and then I take a look for setups that align with those, right? And then once I've got my analysis, once I've got my if then confirmed and I find a setup, then I go through what do I want to specifically see price do throughout that setup to trigger that trade, to actually have me flip the trigger and itch that trigger finger that I have uh, before I enter that trade, right? And then we're going to cover this risk management side, but I thought it was pretty important to kind of give you guys this information. So this is from a study from 2022 with 17,000 traders. Okay, so take from it what you will. This is more or less it was um, a study that's done for mostly, I believe it's forex traders. I think that's mostly it, but I mean the averages are pretty revealing. So we're going to look at 9 different fronts that you're going to want to. And I'll give you guys this slide deck at the end, so you don't have to take a whole lot of notes or whatever. And there's a nice summary at the end of it too that I put together for you guys. It kind of summarizes it up. But your maximum loss versus average win, profit factor, win versus loss duration, quality over quantity, following the trend, focusing on limited pairs or focusing on limited markets to trade, knowing what time to train, your win percentage, and your losers a day. All right. So those are the 9 fronts where they isolated out some pretty solid stats on what the top performers are doing. And so we'll kind of go through these one by one. If you guys got questions, please let me know throughout any of this. But we'll start with average win versus the maximum loss. All right. So your average win needs to be greater than your maximum loss. And the way that you calculate that, or the way you look at that, is it's your maximum loss from a single trade over a specified period, whether you're looking at a day or you're looking at a week or you're looking at a month. You kind of want to have a handle on that. Your daily, weekly, monthly analysis, your average win equals your total earnings divided by your wins. So how much did you make on your wins only, right? And then you divide that by the number of trades, and then you come up with a ratio, right? So for an example, your average win is $1,000, right, per trade, and your biggest loss on a single trade that period is $500. So your ratio is 0.5. Okay, 7% of traders can maintain this ratio,
Wow.
and 53% of the payout volume that this particular, so keep it in context. This is the top performer of this particular prop firm. So 53% of the payout volume goes to 18% of the traders who can maintain that ratio of under one. 7% of those can maintain that ratio of 0.5 or better. All right. And essentially, what does that mean? If you really just summarize that, what does that mean? That means the top dogs are cutting their losers incredibly fast. They don't sit in these dogs. All right. And that's essentially what they're doing. Okay. So that's how you calculate it. Again, I'll give you this slide deck so you don't have to jot any notes down. I just recommend listening and absorbing a little bit of this information. You'll have the data with you after the end. And so profit factor, that's another one. All right. That's another the second front. This is the total amount generated from winning trades divided by the total amount from losing trades. To be profitable, your profit factor has to be greater than one. Okay. So 58% of total payout volume went to 14% of traders with a 2.0 or a 2.5 profit factor, essentially greater than a 2.0. All right. So example, you've got 100 trades, 57 of them closed in profit of 5,700, 43 closed in a loss of 2,000. That gives you a profit factor of 2.85. So they're losing small. They don't have a great win percentage by any means, but they're losing small and they're winning bigger. So they're winning, they essentially have an average of $100 per trade, right? And their losers are less than 50. Okay. That's their profit factor. So 14% of traders are in that 2.0 to 2.5, and they're claiming 58% of the total payout volume. Okay.
Dan,
All
was
right.
your Dan on your
What?
carrot there on the second bullet? Is that backwards?
Yes. Sorry. I did
No,
this
no,
at,
no worries, no
I,
worries, no worries.
yeah, I did this at 4 a.m.
Hey,
My
hey,
apologies.
we've all made slide decks.
Yeah, that should be reversed. My bad. Good call. All right. So win duration versus loss duration. All right. So your holding time of winning trades versus your holding time of losing trades. That's all you're really looking at. So, for an example, I held my winners for a total of 80 hours, held my losers for 40 hours. All right. And most of your platforms are going to give you that. And so that means your ratio is 2. So I held my winners 2 times longer than losers. The bigger the number, obviously, the more profitability increases, right? So 59% of the total payout went to the top performing 15% of traders greater than 2. So only 15% of folks, of the top traders that are taking 60% of the pie, of the payout pie, have greater than 2. Quality over quantity. This is what they found from 17,000 traders again. And I believe the study was done over, it was either 6 months or a year. I have to go back and look. But the more trades executed in a certain time period, the less profitable you become. All right. So
You
executing more
know,
trades.
you said
What?
to mention if something's going on in the market, opening's dropping like a rock.
All right. We're left off right here. Quality over quantity. The more trades executed in a certain period of time, the less profitable those 17,000 traders became. All right. So monthly stats, 12% of traders are getting paid 60% of the payout volume with 10 or less trades per month. This was done over monthly stats. 34% of traders who have 25 or more trades per cycle were claiming only just 2.4% of payout volume. Now, again, this is this was pretty eye-opening for me and at least this stat particularly. Um, what I would say is it's not necessary to really mirror this, at least from what I've seen. Um, and get yourself down to 10 trades or less per month. But if you're taking 10 really high quality trades per month on A plus setups, I understand where that's coming from. But 34% of traders have 25% or have 25 or more trades per that monthly cycle are claiming 2.4% of the payout volume. So
That looks like a 80-20 law work.
well, yeah, I mean that's the standard distribution. I mean
Exactly.
that's essentially taking place here. None of this should be really shocking, but it is kind of interesting to look at the stats
Yeah.
Good confirmation. Yeah.
as they come through. And the reason I wanted to go through this is because as you guys are building your plans, keep some of this stuff to the
The
forefront of
background,
your
yeah.
mind. And it really helped me dial in the fact that when I first started trading, I was taking a lot of trades, a lot of them, and it was way too many. And this one really hit hard with me, and it's the reason I'm so selective. It's the reason that even when I see a setup and I don't see the execution part of this following through, I will not do it. Right? And this
Mm.
this is the thing that really helped me become profitable in trading. Right? So let's go to the next one here. Follow the trend.
Dan, this is really good stuff because this is data. You hear so much crap out there, you don't know what's true. This is
Yeah,
real data here.
this is
Thank you for this.
no problem. Yeah, this. I thought this was well worth the time. But
Hmm.
so this follow the trend, right? So going long in an uptrend and short in a downtrend. This is what the best guys are doing. And Tim, I'm not trying to slam you here. I know you're a contra trend guy. I know a lot of profitable contra trend guys as well.
I'm listening
Um,
very, very, very closely to this, especially the last part with the number of trades, because not only counter trend trader, but overtrade. So,
yeah.
yeah.
So going long in an uptrend and short in a downtrend is essentially what we're talking about here, right? The profit percentage from a selective bias, right? So are you profitable taking shorts or longs in this period? That's really all you're looking at. So over the course of a week, let's say you go and you break down your trades and you say that let's say you had a kind of a mixed bag and you didn't really have a good bias for the day. You're probably not going to have, or for that day or the week, you're probably not going to have a great trading session. This is why I hammer so much on my daily bias and want to have that bias. So I know that I'm going long in an uptrend or short in a downtrend. That's where my best trading days are, right? So when you assess that period, 15% of traders were paid 56% of the total payout volume, having 90% of their trades be in one direction. All right, let me say that again. The top 15% of traders were paid 56% of the total payout volume, having 90% of their trades be in one direction. So the top dogs in a bull market are going long. I know it doesn't sound like it's revolutionary stuff, but it is. um, the top dogs in a bearish market are shorting, right? It doesn't seem like it's very, but just clarify that for a second. Only 15% of traders are doing this. 85% are not. Okay. So that's why I hammer on selective. I'm very selective of what I get into. And I'm not perfect. I'm not going to say that I'm always on this side. No. We'll go through a summary at the end here, and I'll show you what the things that I excel at and the things that I need to work on because I'll be very upfront about that. That's not there's no secret. Um, so here's the focus on a single market or two, right? So 6% of traders were paid 43% of the total payout volume trading a single market, one thing. They're really good at one thing. All right. 17% were paid 33% of the total volume trading 2 to 3 markets. So a total of 23% of traders were paid 76% of the total payout volume trading 3 or less markets. So go back through your own insights of what you're doing in your trading. Are you trading 8 markets? Are you trying to keep tabs on the intricacies of 8 different markets, 10 different markets? If I follow a lot of traders on Twitter, good and bad, and I see all of these folks out there trading 17 different fronts, and I'm like, there's no way they're doing this. There's literally no way that they can do this. You cannot have this kind of a win rate. And so if you guys follow any traders on Twitter, take all of them with a grain of salt because most of it is Somewhat BS, if you ask me. And then 43% of traders are trading. So 43% of traders trading more than 3 markets were paid 6% of the total payout volume. Okay. 23% of traders are trading 3 markets or less, and they're claiming 76% of that total pot. 6% of traders are trading 3 or less. All right. This is why I focus on essentially one market. Profitable trades only on profitable days. All right. So select your times to trade. Limit yourself to trade on the days and times where you make your money. So example, for the last 12 weeks, you're profiting the highest on Tuesdays. This means you should trade the specific markets that you are most profitable with on Tuesdays. That's aligning the probabilities in your favor. Okay. 9% of traders getting paid 45% of the payout volume that trade 1 day a week. 38% of traders are getting paid 33% of the volume trading 2 to 3 times per week. And then 21% of traders trading 4 to 5 days a week are claiming 52% of that payout volume. So I think if you add that up, that was right from the study. Does that add up? 45, 33.
Pretty close.
Doesn't look like that adds up, does it?
No.
Oh, wait, it does because it's cumulative. I may have to go back and check that one. Hang on. I did this at 4 a.m., but that doesn't add up to me.
It's probably the traders, like 9 and 38 and then 21 now.
Yeah, maybe that's right.
Traders. I don't know if that.
Yeah, that could be right. I'll double check that one, but essentially the takeaway from this is that the more selective of the time zones or time frames that you're trading. I don't know that it's it'd be interesting to see this study broken out, AM session, PM session, or what hours of the day are you engaging your capital. I think that would be more. I don't know. It'd be a very extensive study, but this was just essentially by day. But the less trading on your profitable days that you tend to be more profitable on, trade those days and trade the securities that you know, right? And again, not revolutionary stuff, but pretty clarifying when you put the backing to 17,000 traders. All right. Win percentage. So 1.83% of traders are getting paid 40% of the payout volume with a greater than 90% win rate. All right. Less than 2% of traders can maintain a 90% win rate, and they're taking 40% of the pot. 14% of traders getting paid 67, 2/3 of the payout volume with greater than an 80% win rate. 34% of traders getting paid 87% of the payout volume with a greater than 70%. All right. 50 to 60% win rates claimed less than 2% of the payout volume. So you can be profitable at 50 to 60%. You're just not going to get paid as much. And again, not revolutionary stuff, but this is the performance metrics of this study. Okay. And then this one, obviously, the headline on here is obvious. It's very obvious. Less losers, more profits. Duh. Right. Number of losing trades in a day. That's really what they were assessing here. 6% of traders having 1 or 0 losing trades in a day, claiming 41% of the payout volume. 14% of traders having 3 or less losing trades per day claim 73% of the payout volume. So that's kind of your target, 1 to 3 losers a day. I have a rule in my trading plan. If I lose 3 trades or more in a day, I'm done. If I lose 3 in a row, out. Bye-bye. Shut down the computer, go away. Do I stick to that all the time? Nope. But that's my rule. All right. 39% of traders hit 8 to 9 losses per day and are paid less than 1% of the payout. So if you start dipping into this range, your profitability drops considerably. Your odds of profitability drop massively. Okay. All right. So let's roll it all up. We went through all 9 of these, right? and this is kind of the summation. Maximum loss versus average win. Top 18% of traders are under a 1 ratio. Okay. Profit factor. Top 14% of traders are above 2.0. Win versus loss duration. Top 15% of traders are above 2.0. Their winners are running, their losers they're cutting. Right? That's essentially what you're getting off the top of these top 3. Quality over quantity. Top 12% of traders are trading 10 trades a month or less. Following the trend, top 15 of traders had 90% of their trades in one direction. Number of markets traded, top 17% of traders trade 3 markets or less. When to trade, top 38% of traders are trading 3 days a week or less. Win percentage, top 14% of traders have an 80% win rate or greater. I think the key to take away on this one is that win percentage, that 50 to 60% win percentage, was claiming less than 1% of the pot, of the total payout pot. All right. Losers a day. Top 14% of traders have 3 or less losers per day. All right. So given this data, what do you guys think you can do with it? How do you guys think you can manage yourselves through this data? I think it's something to ponder. And as you guys are, if you haven't done it, go back through the slide deck I put last week, and whether you stick to that, whether you stick to that 4 quadrant plan or not, or you got a 5th quadrant or a 6th quadrant that you value, whatever. Right? This is a baseline for you guys to start from. Jim, the data is from a study done from
Trade Funder.
Trade Funder. And this is a prop firm.
It's a big one.
Yeah, it's a prop firm that I think is most forex traders. Oops. And I don't know if they published it, but from a prior role of mine, I got access to it. And I don't know how widespread this is, but none of this should be real shocking data. As what's the stuff that we all hear about all the time? Cut your losers fast, let your winners run, take quality trades, select your time frames,
Trade less.
you have to trade in your most prime trade zones and your trade times, trade those times, limit your markets that you trade. And cut your losers, right? You have a hard rule on your losers. If you can follow this stuff and execute on that stuff, build a plan around it, you're going to get funded. All right. So risk per trade, we'll kind of dive into this a little bit. I've got more on this for you. This kind of goes into another aspect that kind of concludes the stats summary side of it. So I think we'll just dive into this next week. If you guys don't mind, we'll get back to the markets for a little bit. But I thought I'd share that stuff with you it was really eye-opening to me when I first started to look